Hey everyone, welcome to Optimum FX weekly analysis. It's currently the 22nd of August today, 2021, roughly 9 p.m. where I am at the moment, and 12 hours until market open. So today I'll be covering our major currency pairs. I'll be looking at gold, and I'll be looking at NASDAQ as well. But firstly, I'll be looking at what macroeconomic data is going to be released this week. I want to understand how that data can impact the markets. We can map out trade ideas with the fundamental and technical confirms. So firstly, I'm just going to quickly have a look at what data is going to be coming out about our major economy. So firstly, we're going to realize that it is the end of the month and we must realize order flow. We've got institutions, hedge funds, banks closing their positions at the end of the month. So we have to keep that in mind when analyzing order flow. Okay, so firstly on Monday, I'll keep this very short and sweet. We do have preliminary PMI data coming out on Monday in US. On Tuesday we do have new home sales. The next day on Wednesday we do have weekly mortgage applications, which actually ties in with new home sales. We're going to keep that in mind. We also have durable goods orders. So durable goods orders actually aligns with manufacturing PMI. It's essentially what the manufacturing sectors are purchasing in regards to durable goods. So if manufacturing PMI is very optimistic report, more than likely we will see durable goods be more expansive than contractionary. So moving on Thursday, we do have one of the most important data that you're gonna see probably this year is Jackson Hole Symposium. For people that are unaware what Jackson Hole Symposium, just let me quickly break it down. So Jackson Hole Symposium is when bankers, policymakers, economists, academics, even US government representatives, they all come together to Wyoming. They won't actually come to Wyoming this year due to the current situation with COVID. So essentially this meeting will be done virtually, but pretty much it's just all these high class individuals coming together and coming out with their macroeconomic forecasts and discussing the current the current state of their economies in their respective countries. So it's not just focusing on US, it's focusing on the global scale. Okay, so we do have some high class individuals from around the world, obviously talking about the main topics that will be discussed in their papers will be in regards to obviously inflation, labor / employment, and international trade. Obviously talking about what sectors will improve in the coming months and in the coming fiscal years. But essentially it's just coming out with their macroeconomic projections in certain economies and targeting certain industries and sectors. So we do have to keep that in mind, and you might ask yourself, how can this impact the market? So this can impact the market in a very high way. So in a very high way, what I mean by that, because we do have these high class individuals, we can provide a market sentiment depending on their importance and what's actually being discussed in their papers. So we do have to keep that in mind, what they're saying, what they're forecasting, if they're encouraging tapering and bond buying in their respective economies, what they need to see for the economies to flourish in the coming quarters, what situations can arise. So yeah, we do have to keep that in mind. But the Jackson Hole Symposium, it will go on for 2 days. So just throughout NY session, they'll be discussing across your bankers and policymakers, economists from their respective countries, just talking about their projection. So yeah, we will see a lot of volatility in the market, against the dollar, US equities, and essentially just global equities and currencies. So we do have to keep that in mind. So the best thing to do when you do want to trade these high impactful data, obviously just wait for market structure to form. and trade based off your confluences. So your trading plan shouldn't completely differ from what it is right now. So it's just being aware of what this data is and how it can impact the market, and understanding the true foundations and principles of it. So moving on, we do have personal consumption expenditure, which is the Fed's tool to measure inflation rather than using CPI, which is Consumer Price Index. We do have GDP numbers coming out. On Friday, we do have PCE Price Index numbers coming out, along with inventories, GDP, not GDP, sorry. We do have trade balance data coming out. And we do have, in the week, roughly, we do have Michigan Consumer Sentiment Index, along with Baker Hughes US oil rig count. So that's roughly the US. We don't really have much data across our major economies, but with Europe, we've got preliminary PMI data being released on Monday. On Thursday, we do have money supply data, along with ECB monetary policy meeting accounts. So we can see a bit of volatility coming on Thursday and Monday to start the week. UK, you don't really have much data. All you got is just preliminary PMI data being released early on Monday. Japan, you do have preliminary PMI data. You have leading economic index on a month-on-month basis, and you do have CPI numbers to end the week. In Japan, Canada, you do have raw material price index, industrial product price, month-on-month numbers. We can see, this create a bit of volatility, like nothing really crazy. So to keep that in mind on Friday to end the week, roughly at I believe that's NY Open. When it's going to be released. Now with Australia, preliminary PMI data. Subsequently to that, a couple of days after, we do have RBA member Ellis speaking on Thursday. Private capital expenditure quarter-on-quarter basis, and then the week we do have retail sales. So your consumer confidence numbers. More than likely, it is going to contract, because that's what the consensus is. It's going to contract. More than likely, it's going to be as consensus or below, just with the current climate within the Australian economy, with the increased lockdowns throughout Sydney and Victoria with the Delta variants. So with a lot of businesses closing down, that decreases revenue and decreases consumer spending. So we must understand that, which has led Australian dollar and our risk currencies to fall off. So moving on, let's go to the charts. We understand what macroeconomic data is going to be released this week. Now we can map out potential trade ideas. So as we can scale out a bit, we can see the Australian dollar start to sell off, retesting these previous high time frame order block lows. We can see here, we did retest these lows here. We did get a nice retest here. We're going to push back up, push down, got a nice little retest, and essentially once we broke below this little high time frame key level around the order block low, we did push to the downside and push further down. We did push further down, and then we did do a little high time frame order block. So this high time frame order block, we did accumulate in this little range here. So we did play around this range, this high time frame range, which is roughly, this range was about 74. So it's roughly about 150 pips. We did get a strong retest here, and then we did push further to the downside. Okay, so let me clear that up so we can understand that. So when I'm going back, looking left to the chart, alright, if we do break below 70 cents, we can definitely see Australian dollar commence in this bearish structure and continue to fall down. But fundamentally, the only way that's going to happen if these increased lockdowns stay within the Australian economy, because the Delta variant is the only thing causing a pullback or dovish sentiment within the economy. Like, that's the only thing that's causing this sell-off. That's the main, I guess, fundamental catalyst emphasizing this bias. Okay, so just got to realize that. So probably, yeah, this will be a make or break level at 70 cents flat. We could get some strong rejections initially because this is a very strong liquidity level. Because when we first come down here initially, we're not just going to melt straight down. You're most likely going to get some strong rejections to side time frame key level and push to the upside. And understand that there's not enough sell side momentum continue pushing down. We've got to understand that, you know, that the market moves in waves. You know, like we can't just do this and then just go down. Like, it doesn't work like that. So what happens, you know, you kind of do this, come back up, then come back up, come back here, retest that little liquidity zone, then push further down, possibly do a little order block again, come back up, and then, you know, you retest this order block, then continue back down. So yeah, the market, like, that's essentially here, right? I'll quickly draw it out, right? So, you know, we consolidate this little area, fake push to the upside. Really easy to say in hindsight, but, you know, once you actually know the initial move, you do push down, accumulate, do a little high time frame order block, push further down. We don't break above or play back in this area again, so we just accumulate, and then we just push further to the downside. So that's essentially how the market moves, because the market just doesn't go in one direction. Like, it pulls back, and the main reason it pulls back is because buyers or sellers, wherever the market's going, are being relieved out of the market. Okay, they're being relieved out of the market by the other side. So for this here, strong sell side pressure. Okay, strong sell side pressure being relieved by buyers. Accumulate. Once there's enough sell side liquidity, we push further to the downside. And the main reason we did push further to the downside was due to macroeconomic conditions, more than likely a contractionary period or a contractionary quarter in the Australian economy, which has caused the Australian dollar to decimate. So we do have to keep that in mind. So what am I looking for right now? So, alright, what am I looking for right now? So if I'm focusing on price right here, yeah, like, I don't really want to go and pick a bottom right now. If I'm picking a bottom right now, it's at 70 cents flat. Okay, that's if I'm picking a bottom. So moving on. So with the Australian dollar, with this current market structure that we have at the moment, I can see a bit of a consolidation area, right? What I'm really liking is if we can stay below here, and not come back into this range, taking some continued sells and push to the downside, and most likely once we break below this little liquidity level, we can push further to the downside. Okay, so I'm really liking strong rejections, not playing back in this range, strong rejections at these previous candle body closures. So come back up, come back here, then we essentially retest this little candle body closure level at around I think that's around 71, like 200, I believe, and we push further to the downside. So that's essentially what I'm looking at to continue this trend. Otherwise, I'm looking for safer buys once we break above this little liquidity level, okay, which is roughly about 71,550. So if we do generate a bit of a consolidation, get some nice candle body closures in this range around 71,500, get some candle body closures there. Once we push to the upside, break and retest here, and no candle body closures below 71, roughly 550, 600, we can push to the upside and start to correct this initial move. That's what I'm looking at. So I'm more inclined with sells, just with the continued and, you know, lockdown throughout the Australian economy, because that's the main reason why it's been selling off. So that's what I'm really looking at on the Australian dollar. I'd rather wait for the accumulation to occur, see like a high time frame order block occur, and once we do like a retest below here, you know, very safe for sells, and then we can push further to the downside if we see more of a risk off sentiment throughout the economy. So moving on to Euro, I'll take off these key levels, because I know they're very hard to see at the moment. Well, very hard to locate price. So what I'm really liking, if we can stay below this little level here, right? I'm really liking if we can stay below here. Okay, that's what I'm really liking. So that's roughly about 117,200. Really liking if we can stay below here, and I'm really understanding that if we stay below here, if we stay below here, understand the structure here, understand this high time frame key level, we can push further to the downside. Okay, so that's what I'm really looking at with euro dollar. You know, Aussie, Australia, Europe, you know, sterling, like they're all like, if they're all trending bearish, well, if one of them's trending bearish, more likely they're all going to be trending bearish, because at the end of the day we are trading it against the world's reserve currency. Okay, and we know the main reason US dollar has been appreciating due to tapering talks, all right, which is decreasing liquidity in the market, decreasing fiscal assistance from the central bank. So what does that do for the US dollar? Okay, that makes it more valuable. That means less money is going to the system, less money going to treasuries, mortgage-backed securities. All right, so with that being said, that makes the dollar more valuable. Why? Because it decreases printing, which decreases the supply, increases the demand, and they're more closer to hiking interest rates. Okay, because they only print money to provide liquidity in the market, and that's when they provide low interest rates to encourage consumer spending. Anyways, so what I'm really liking is if we can stay below this little liquidity level at roughly around 117,200. Oops, let me fix this one. Sorry. Yeah, so what I'm really liking is if we can stay below here, do a little retest, and then push further to the downside, and potentially safer sells once we retest below here. So once we retest below here, come back down, retest potentially, and push further to the downside. So that's what I'm really looking at on euro. If we do get a nice candle, like high time frame candle body closures above here, above 117,200, I will like to push further to the upside with strong euro data and continued weakness with the dollar. So yeah, that's what I'm really liking here. You know, just show out a nice candle body support here and take some buys and play them up to this range here. Sorry, and once we retest above here, we can generate a lot more buy side liquidity and we can push further to the upside. So that's what I'm looking at on euro dollar at the moment. Yeah, we're at this bit of an indecision point, so I prefer to wait for the technical. So my technical confirms just waiting for the candle body closures, because when you're looking at price, whether it's on the 4 hour, 1 hour, you can identify where there's exhaustion and where there's strong momentum, whether it's a bullish or bearish candle. Like, it's very, like, what you understand and look at the candles very closely, you know, scale down the time frame, scale up on the time frames when you need to. It's really, like, I don't want to say it's easy, but it can become a lot more routine and understanding where there's exhaustion and understanding where there's momentum. So just got to keep that in mind. So yeah, that's what I'm really liking for euro. I'm more inclined with sells, to be quite honest. Potentially we even might get some strong rejections here, right? Have a look. Yeah, we might even get some strong rejections here at the previous at these previous monthly lows here, and we might get some strong rejections and push further to the downside. And then once we retest back up here, oops, sorry, retest here, we can push further down. So that's essentially what I'm looking at on euro dollar. So yeah, when I'm putting on my high time frame key levels, we did retest my key levels right on the dot. So yeah, I'm really liking if we can stay below 117 flat, 117 flat. But if we break above here, we could play back in this range and essentially mirror this initial downside move. So with sterling at the moment, I'm really waiting for us to come back to I really want us to come back to 136 flat. So once we break in retest below here, we will push further to the downside. I'll zoom out and you can see what I'm talking about. Okay, so this is like literally, this is yeah, this is a very key level, right? Because it matches up with this low here. these previous lows here. So once you break and retest below here, we will fall to the downside. I just know for a fact that we're going to get some strong rejections at this higher time frame key level, okay? Because since it's been roughly about a month since it's been down to this low. Yeah, roughly to this low. And main reasons why is just that, you know, weak macroeconomic data across the UK. I know CPI numbers were very weak at the end of last week, and we did have a weak trade balance in GDP numbers, just with extended COVID variants. There's some minor Brexit tensions at the moment, but nothing too serious. So we do have to keep that in mind, but I really want to see how we react to it. I want to get back to like 136 flat again, see if we can retest that. But what I'm really liking at the moment with sterling dollar is if we can retest here and push further to the downside, okay? So what I'm liking here, get some nice candle body closures, form a nice, you know, get some nice candle body closures below 136 flat, and then we can push further to the downside, accumulate, then push further down. So that's what I'm really liking at the moment. Then push further down. So, but other than that, if we do see Dixie start to fade from those highs and see a lot more optimistic headlines within the UK, we don't have much UK data coming out, but if we do get some optimistic speeches from Bojo, so Boris Johnson, who's the Prime Minister, or if we do see optimistic headlines from the Finance Minister or central bank members, we can definitely see, you know, potentially talking about tapering soon. And we could see a bit more buy side momentum with the sterling, get some strong rejections at these monthly lows here. So yeah, I'm really liking, you know, these are your very high risk buys. You want to do a bit of a candle body support above this level, and you really want to see Dixie just fade from those highs. But the only reason I'll be buying here, you know, it'd be a very high risk position to take here, but yeah, you could potentially take this trade into the previous lows here, okay? So by the previous lows, I'll be targeting these lows here, then potentially, this is, I mean, that's a long-term swing trade, okay? And potentially, yeah, be probably targeting these lows here too. So yeah, be targeting, you know, these significant price levels, okay? So that's what I'm looking at on sterling dollar. Very high risk buys, very high risk. So yeah, I'm just going to be very mindful of that. That's what I'm seeing on sterling dollar. We haven't really been accumulating that much, or performing a nice little order block here. We did get a bit of accumulation, but this was just a pullback to the previous low here. We did push further to the downside, so I'm just waiting for like a higher time frame order block to be formed to take my trade. So moving on to GJ is really similar. We did get some retests at these previous lows here around 149.300, and we are starting to push back to the upside. So with that being said, what I'm really liking is we are in a bit of a order block at the moment, so we can see a bit of an order block being formed like this at the moment. So I do want us to play in this little range for the time being, till we actually get a indicative idea where sterling is going to head due to the current sentiment. So once we retest here, we can push further to the downside, but I'd be very cautious once we come down to these lows. So I'd be very cautious once we come down to those lows. So if I'm taking sells below here, I'm initially just targeting these candle body closures, you know, 149. That's going to give me like a nice, you know, that's still going to give me like a nice, you know, 50 pip squeeze possibly, or like 40 to 50 pip squeeze. That's what that's going to give me once we retest here and push further to the downside, targeting these previous candle body closures. I don't want to target these wick lows. I usually just base my take profit and stop losses on the candle body closures, because in my opinion, wicks. So when you see the wick form on previous candles, that's just showing you where exhaustion was. So just like to focus on the candle body closures because price closed there in that predefined time. So moving on, yeah, I'm really liking if we can retest below here, but I'm just targeting these previous lows here. What I'm really liking, if we can create a candle body support at 900, candle body support at 900, I'm really liking for some buys here and to mirror this initial rally back up. We could potentially take a trade based off these previous candle body closures, low candle body closures, but I'm not too inclined on that. I'm not really liking the price action that I'm seeing currently, so I'd be more inclined just to wait until we do a bit of a candle body, some nice candle body closures at 900, and push further to the upside and essentially mirror this move here, okay? Which would actually fall in line with our sterling dollar trade bias if we do get some strong rejections here and push to the upside. So that's what I'm looking at on GJ. USDCAD just been mooning just with tons of dollar strength. I want to see how dollar reacts to this previous sensitive price level here. I do want to see how it reacted here at the previous highs, okay? So I do want us to pull back down. What I'm favoring at the moment is if we can generate a bit of a nice candle body support, take some buys up, and continue to the next leg up. However, if we get some candle body closures here, potentially on the 1 hour, I'm really liking for taking some continued sells, okay? So very high risk shorts here, and I'll show you where I'll be targeting initially, just with the current price. I'd be targeting these previous order block highs and low here, and once we did push further to the upside, if you quickly have a look, we did retest the previous order block high, range high, accumulation high, whatever you want to call it. We did retest that previous high and we did push further to the upside. There was no retest here or no strong rejections. Dollar was just rallying above those monthly highs. So yeah, it's looking really good for USD to continue this rally back up. But once you get candle body closures below here, we will push further to the downside. Okay, so that's what I'm looking on USDCAD. See if I do now dollar. All right, dollar. Quickly have a look at dollar. Right, put this back on. So yeah, so when I'm looking at dollar right now, with dollar, we're starting to fade from these highs at roughly 93,700. We are going to see a bit of volatility with Jackson Hole Symposium. We've got PCE data, trade balance, GDP numbers coming out this week. Durable goods orders being released this week as well. So I said I'm not really inclined on selling DXY at the moment. Just as we know, the only reason DXY's been rallying is with optimistic headlines from the central banks talking about tapering soon, so decreasing liquidity out of the market. All right, so like I said, that makes the dollar more favorable. So what I'm really liking, is if we can retest this previous, if we can retest the previous high here. So I'm really liking if we can retest that, potentially come down here, potentially prior to Jackson Hole Symposium, and push further to the upside. Okay, so that's what I'm really liking. Yeah, so if we do start to fade, see DXY buys being relieved out of the market, push further to the downside, I'm really liking if we can generate a bit of nice candle body support at 93, roughly 150, do a nice candle body support, and then push further to the upside. Okay, so what I'm really liking, can continue our next leg high, but if we do get some candle body closures below here, I want to retest 93, 150 and push further to the downside. Okay, and mirror, in order for that to happen, I'd want to mirror this move here. Okay, I want to mirror this move here, right? I'm targeting these previous lows. That's what I'd be targeting initially. Okay, yeah, I'll be targeting that level initially. I'll be targeting that, and once we retest below that, I probably want to push further to the downside and then break down. Okay, so that's what I'm really liking. If we see dollar close below here, the only way we're going to see it close below there if we get some weak macroeconomic data. Okay, I don't think the central bank is going to be very dovish anytime soon, unless you get some more lockdowns, like high restrictions in place. We see some policymakers, bankers, institutions, potentially talking about a very dovish economy, how it's going to contract this year, but I doubt that's going to happen. Just with the current climate of the economy, like it's not going to contract. If it did, Dow Jones would fall out of the sky, so would Nasdaq. So I really don't think that's going to happen. So yeah, that's what I'm really looking at on Dixie. So the US dollar. So moving on to gold, I'll quickly just cover gold. Okay, so with gold, let me take that off. All right. So with gold at the moment, we are in a bit of accumulation phase, right? So after dipping from these lows at 1680, which was just a mini flash crash, algo's taken over a bit. So yeah, so after dipping from these lows here, which in mine were these lows, okay, which were roughly these lows here, right to the point, right to the yearly lows, and we bounce back up, nearly $100 later, 1,000 pips later, so forth. Okay, so right now, the current market structure I'm seeing at the moment, with dollar gaining a bit of strength, gold hasn't really come down that much with, Dixie, especially with Dixie breaking above here, this is a very, zoom out, so you know what I'm talking about. So Dixie breaking above here, that's a very key level, right? We're breaking above the previous yearly highs. So we've broken above the previous yearly highs, and if you're long on Dixie, the next area you're targeting is 94,300 and potentially going to 94,680. The only way that's going to happen is if they actually taper, right? And then you'll see Nasdaq start to fall off. You'll see Dow Jones start to fall off. You'll see our risk currencies fall off because more investors are putting money. More investors are pulling their money into the US dollar, right? More than likely, treasury yields are going to appreciate as well. So that's enough of me going on a rant. But as we can see here with the current market structure with gold, so with gold at the moment, we are in a bit of a accumulation phase here, right? So yeah, we're in this a bit of accumulation phase. So what I'm really liking, gold's looking real easy. This is looking real easy, right? All right, these highs, they're getting lower. Okay, these highs, they're really getting lower. Okay, potentially we're doing a wedge pattern, but I'm not a firm believer in these wedge patterns, right? If anything, I'm just drawing a range or doing a temporary trend line. So for your safer sells, what I'm looking at is if we can retest below here. Okay, really liking if we can retest below here, push further to the downside, and start to mirror these previous moves. Okay, so that's what I'm really liking on gold. So push further, accumulate, back up again, push further down, and mirror. So I'm really liking if we can mirror this move here. Once we retest below here, we will push further to the downside. And as we're going to see here, it is respecting this higher time frame trend line. But once you retest below here, that's when you'll sell off. And once you see candle body closures below here, that's when you'll just continue to sell off on gold. So gold's looking like a real good trade for some shorts, just especially with the highs being a lot lower. And you're seeing a higher time frame accumulation phase being formed, obviously aided with Dixie strength. So that's what I'm really liking. So that's one trade idea I'm really looking at with gold this week. So yeah, I'm ideally taking the trade probably off the retest here and pushing further to the downside. I'd just be targeting, so let me clear that up. So yeah, I'd be targeting, let me put the levels back on. Oops. So yeah, I'd be targeting potentially shorts at 1777, You know, it's only 70 pip. They should be targeting these lows here, like at 1770, but then I'd be targeting 1762. So yeah, that'll be a very good trade that I'm liking at the moment, because you got to realize, like, once you accumulate out, right, once you retest below here, retest below the order block, like, the odds of price going back into there are very unlikely. Okay, that's just the purpose of order blocks, right? Once we break and retest above here, we push to the upside. You know, I'm pretty sure this was just inflation numbers, or NFP, one of them. And once you retest here, you just push further to the downside and you just come down, right? So yeah, we just got to keep that in mind with gold. So gold's looking real good. We're going Nasdaq, right? Nasdaq, all US equities, man, they're all bullish. Okay, they're all bullish. They will forever be bullish. Okay, if you're ever shorting the Dow Jones, Nasdaq, S&P, ASX, man, FTSE 100, you name it, TSX, which is Toronto Stock Exchange, you are betting against that economy. Okay, and you really shouldn't. So what I'm trying to say here is, you know, Nasdaq is very bullish, but here's the thing: the only thing that's going to bring Nasdaq down, or Dow Jones down, is especially Nasdaq, is once they start tapering. Once they start tapering, like, this thing will sell off. Okay, I'm not saying you're going to see a massive sell off, but we'll just start to pull back. You know, we're just going to see a miniature, like a short-term bearish corrective structure. Obviously, because tapering leads to increased rates, and that's bad for tech firms. All right, tech firms and big companies, because they have to borrow money, and when they're borrowing money at a high interest rate than they're paying currently, when they're at all-time lows, that's going to decrease revenue. So it's going to keep that in mind. All right, what does that mean? Decreases revenue. It means that earnings are going to decrease on a quarter-on-quarter basis. Okay, obviously, like, everything's pre-planned, but their profits are going to decrease. They are going to decimate, not massively, but they will. So what I'm really liking, I don't really like to do some high risk sells. If I'm doing some high risk sells, it's probably going to be at 15,180, which is essentially the all-time high. But what I'm really liking is if we can actually stay below. I'm really liking if we can stay below this key level here, right? I'm really liking if we can stay below here and get some continued sells, okay? And pushing further to the downside, all right? That is a short-term play, and then I'll potentially be targeting these previous lows here. That's what I'd be targeting initially, but your safer buys, you know, would be once we break and retest above here. So once you break and retest above here, you know, potentially what I'm seeing right now is if we push further here, not get a nice counterbody support at the order block low, we can push further to the upside, right? Once we retest above here, that'll be safer buys, and we can continue back up, and we can see Dow Jones doing new all-time high, same with S&P, and obviously Nasdaq. So that's what I'm really liking. In order for that to happen, you probably need to see US dollar start to fade. You need to see some pessimistic headlines from the central bank to not talk about tapering anytime soon, or delaying their tapering schedule. So yeah, that's what I'll be really looking at for Nasdaq at the moment. I want to see a nice retest here, because we can really identify like a high time frame order block being formed in this range. You know, we've essentially got lows here, right? We did dip down, then we're back into this range highs here, right? And let me quickly have a look. Yeah, so yeah, probably want to play back in this range. You know, very high risk buys here, but I wouldn't be too inclined on that. But I am recognizing that these highs are actually getting a lot lower, so potentially even seeing a nice rejection. This would be like a little lower time frame rejection at this key level at 15,150. Want to see if we can get some strong rejections there, but be more inclined once we retest above the all-time highs and continue up to our next leg, wherever that may be. So yeah, so that's what I'm really looking at on Nasdaq at the moment. So yeah, so this is the weekly analysis. If you enjoyed the content, be sure to like and subscribe. Anyways, thank you for watching the video.